Saw a couple of questions that were pertinent to the segment, so I'm going to answer them. I think Steve Seymour said, using the timelines you just mentioned, is that for Euro only or for all major pairs? Steve, good question. The times that I laid out for you are for all the major pairs and the crosses. They apply to everything. The behaviors for each pair are a little different with little different nuances. Example, pound dollar throws a lot of railroad tracks. Canadian, it's more mild. It makes nice M's and W formations. Okay, so each pair has its own personality, if you will, but the times that I've illustrated for you are for every pair on the board. Okay, the 15-minute chart is the chart, man. Intraday traders, 15-minute. If you want to trade anything higher, 1 hour and 4 hour. Okay, good one. What is a vector candle? A vector candle, by definition, is like a spike or a breakout candle. In the retail traders world, this might help you, is that it's what they call a momentum candle. But in fact, what it is, it's the first leg of the stop hunt. Okay, a vector candle usually forms the first leg of the stop hunt. It's the candle that gets the action going. It's the candle that breaks out of the Asian range and starts the action. Okay, I think the definition is on the sheet, but if not, that's as good as it's going to get. Okay, all right, any more questions about what we've covered so far? Now, I wanted to point out one more thing. Some of you made some comments about the timeline, about taking the breaks and stuff. Here's the deal, man. I've done my fair share of research about learning times and how people feel and how long it is before people, I guess the right way to say is crap out and had enough. And before I became a teacher personally, I tested the waters, and I was with an institution that drug it out for 8 hours. And after lunch, everybody fell asleep and didn't want to hear from me anymore. And I promise that's exactly what I didn't want to do to people. If I was interested in taking your money, I would sit here for one day, get through the whole class, and then call it a day and wipe my hands of it. That's not what it's about. This is a process of you getting a deeper understanding, and for me to take a fire hose and shove it all down your throat in one sitting is absolutely unfair to you, and it does you no good. Some of you know me, so you know I'm sincere in my heart. I really want you to learn this stuff. I'm here for you. I want you to get it. So with that being said, I talk for about an hour. We take a 10-minute break, gives you a chance to think about it, get up, walk around, absorb the material. We go for 2 hours. We take about a 30-minute break, eat something, keep your brain and your body fueled. Get up, shake it off a little bit, and then we go for another couple hours with the same cycle of another 10-minute break. When we're done tonight, I'm going to give you some stuff you got to do to keep the learning going. So our 4 hours together is only the beginning. I know you don't want to hear that, but that's the truth. You got to solidify this information in your brain. Some of you people have been trading 5, 6, 7 years with the struggle. You got to get rid of that stuff. And the only way to get rid of that stuff is to solidify and understand what I'm teaching you. Jerry wrote, it's the best time they will ever spend. You're right, Jerry, it is. But they got to feel that. It's got to be in them. I can't put it there. It's got to come from themselves. All right, so anyway, let's see. Very good. Studies show that students studying for a bachelor's degree level will lose the ability to focus after 45 minutes or so. So I'm right on. Yeah, so you're not paying attention to me. That means we got to take a break every few minutes. Okay. Mike, I agree with you. He's saying that I'm saying that they collude together. It's illegal. It is illegal, but you go against it and prove it and knock these guys down. It's not going to happen. We're too small. Okay, all right, let's get back to the stuff. I think I covered most of the questions. If I didn't, I'll look again. Okay? All right, so we're talking about net changes and that the dealers are restricted by their net change. Okay, and that they're not allowed to destroy the world economy by simply running 1,000 pips or 2,000 pips. Now, those spikes and those things come. Those things happen. But as a general rule, they're restricted by about a 200 pip per day range. That's why we look at ADR. We study ADR, how it works. Now, I know the ranges have been lower, but if you understand that if the dealer meets or exceeds the ADR, most likely his next behavior will be to form the volatile M or W and then reverse back into the range. risk appetite has entered the market. Okay? Corrective in nature against the cycle. All right, so what I'm asking you to do is to look at the bigger picture. Don't get caught up in the aggressive move. Don't be looking at such a small segment of your screen that when the dealer's chopping around and hitting the high or hitting the low and coming off that level, that you're all like, oh my God, I'm winning, I'm losing, I don't know what's going on. Is it up? Is it down? Step back and look at the bigger picture. The aggressive moves are usually part of the stop, hunt, M and W formation or high formation where he's working the area or the low formation. There's going to be a midweek reversal. Now, as soon as I say that, they'll tear right through the levels and not have one. Under normal market conditions, the dealer will set the psychological support and resistance levels in the first part of the week and trade away from those levels. He will then issue a midweek reversal in the form of an M or W, which becomes the anchor point or the new peak formation for the cycle. The peak formation is the low of the week or the high of the week. When he's making the midweek reversal, you will usually have a more aggressive M or W formation. Risk appetite. It'll be big. It'll be aggressive. It might be over 2 sessions. It might be over 3 sessions. He might hit the high at US Tuesday and then repeat the level Wednesday, London, and form a larger formation. So he might form the high of the week and pull back and hold this and then go at the level again. And this might be Tuesday. This might be Wednesday. And in between here, he chopped and handled the crosses. And then he makes his Wednesday, Thursday, Friday, end the week. 1, 2, 3 levels over 3 days, a unidirectional swing. And to end, remember, end the week on a trap. End the week trapping the traders. Okay? So you could simply, once you understand the method and how to break down a chart, you could simply see the week beginning on Sunday, walk up to any chart anywhere, establish the psychological support and resistance levels, simply lock out or block out the psychological support and resistance levels for the week, and then watch how the dealer will exploit above that level, trade away or trade in line with it. Okay? All right. Let's look at the cycle a little bit. Okay? Typical stuff that goes on during the week. Hit the stops low, rise. Okay? The dealer forms the peak formation high. He's trapping slightly above yesterday's high, the blue tracer. He hits the stops, traps, induces, and then drops. Now, we expect a unidirectional swing for the rest of the week. So we expect the dealer, hit the stops, high, drop. 1, 2, 3. Hit the stops, high, drop, or just straight drop. The straightaway comes when the dealer fails to make a visible stop hunt below the blue box. So this is how a week might be structured. The dealer comes out, he makes the peak formation low, the first part of the week. Here, this would be your peak formation low. Okay? You trade away from the peak formation low for 2 to 3 days. He only does it 2 days and forms the high of the week. Once the anchor is established, the peak formation high, okay, here's your psychological support and resistance levels. First 8 hours of the cycle. Dealer hits the stops low, rises. This is an M formation in essence, but he just induced above. Okay, then what do you got next? You got the safety trade coming out of level 1. Safety trade is a visible stop hunt in line with the peak formation coming out of level 1. If the dealer issues this stop hunt right here, it's lights out. That is a safety trade. It's the safest trade you can take. Why? Because I don't know this is the peak formation until this is locked and he does a stop hunt back in line with it. Here. Stop hunt is back in line with the stop hunt. You also have a head and shoulders pattern, which is prevalent in level 3. The safety trade develops coming out of level 1 consolidation after the peak is locked. When the peak formation is locked, then I look for a stop hunt high drop. Most of the time, you get a straightaway out of here. But if the dealer issues you a stop hunt in line with the peak, you got them. Okay? Unidirectional swing for the rest of the week, away from the peak formation. I don't know if she's here tonight. I haven't looked through the student list, but a friend of mine out in California / Las Vegas is named Sunny, and she's a woman. And I always tell the story, and today's no different. I got to tell it. She has become legendary in her trading. She's absolutely killing the markets now. She fell asleep during this section of my class after lunch right now. She fell asleep. I looked at her sleeping in the aisle, and I wanted to go smack her in the head, but can't do that. It's not very nice. But I don't know. You don't know how it feels to be standing up here in front of a couple hundred people and have one snoring, sleeping on you. It's like, the hell's wrong with her? I'm giving her the keys to the city, and she's sleeping. So anyway, long story short, is she came back to a couple other classes. I got to know her. She's very nice. She's friends with Ray and Carr. She knows them. And she goes to Ray's meetup in Vegas. And she was sitting next to Kim from Compass, not Kim Crumpus. And she looked over at her and said, you know what, I ain't coming to this shit no more. I know everything I need to know. I'm done. And she never showed her face in one of my classes again. Well, naturally, when I seen her sleeping, I didn't think that she would ever get it. I had all these thoughts in my head like, oh, you just wasted your money. I can't believe you're sleeping in my class. I said all these things about her. But I don't know what happened. Maybe through osmosis. Maybe she was dreaming about me. I don't know what happened. But while she was sleeping, it occurred to her that if she just identifies the peak formations and trades away from them for a couple of days, that she would be successful in the business. She started with Euro, and that's exactly what she did. She tracked the peaks, learned how to identify them, and traded away from the peak for a couple of cycles. She then expanded to all the majors and the exotics and the crosses. She converted from spot to swing trading. And now pips are falling out of her ceiling at her house. So you never know who it's going to be, but I got to tell you, I never seen her coming. And I'm really proud of her. And I couldn't be more pleased that someone that was sleeping in my class is now raking in the pips like crazy. So anyway, that's my Sunny story. And if you're here, Sunny, and if I offended you, I'm sorry, but I love you. You're doing great. Okay. Again, typical week, right? Hit the stops high, hit the drop, hit the stops high, drop for 3 days. 1, 2. We expect the dealers to reverse on level 3 and day 3. We expect the dealers to chop the market and bring people back into the fray. After a big drop, the adage, after a big drop, the market must chop. Why? Because after a big drop, a lot of people got punished and they got jammed up. So the market goes into what we call level 3 behavior, which is where they're hitting the stops in both directions. They're showing buyers and sellers opportunity. The trend run appears to be over. The dealer is in essence balancing his book, and most of the time he will correct out of this level against the trend. Okay, so you have day 1, drop, level 1. You're expecting straight away or stop hunt high, drop. All right, there's only 2 moves the dealer's got coming out of here. Hit the stops high and drop or straight drop. Okay? You then start to see level 3 behavior. When you see level 3 behavior, 1 or 2 things can occur. You will get a reset of the continuation, or you will get the reversal. But inside of those moves, there will be stop hunts. You have to anticipate the move, expect what's coming, and using the signals and all the other things coming together will help you identify those points. And we'll talk about that some more, Tom. Okay, so looking at the bigger picture, this is the dealer cycle. It's a 3-day cycle. The dealer sets up his peak formations, the highest point on the chart for the week, the lowest point on the chart for a week, peak formation high, peak formation low. He does that by exploiting the first 8 hours of the session, the psychological levels, and trading against those levels, or tapping the high or low of the level and trading in line with the level. Okay? After a big rise, the market needs more guys. Same type of thing. The dealer will go into what appears to be risk appetite volatility. A sideways movement, if you will. But what's really going on is people have gotten hurt, jammed up, lost some money. They take a break. Think about your own behaviors when you got beat up. What did you do? Drove around in the car, balled up on the sofa, kicked your dog, beat your wife, or maybe beat your wife and kicked your dog. I don't know. Kicked your dog, beat your wife. I don't know. However it is. Whichever one you like to do. Maybe neither, maybe both. But you get mad at the market, so you step aside for a couple days. Well, if the dealers don't have any players, they have to chop and hold the level and wait for you to come back into the fray. Okay? When most traders lose money, they take a day off to reevaluate their decisions, their system. They say things, oh, I got to find a new system, I got to do this, I got to do that. So the market makers know this, and they chop the market, which is level 3 behavior. We call it level 3 behavior, to bring traders back into the fray, and then guess what? The cycle starts over and over again. Okay? The patterns are the same. The behaviors are the same no matter the time frame. Doesn't matter if it's a 15-minute, a 1 hour, a 4 hour, a daily, a weekly. Each lower time frame is part of the bigger time frame's formation. So if on a 1 hour chart there's a peak formation high, you will get an M formation on a 15-minute chart, which will appear as railroad tracks on the 1 hour chart. If there's a 22 trade that develops, on the 15-minute chart it'll be double M tops, but on a 1 hour chart it'll be double railroad track tops. Okay? Each individual session and segment of the market makes up the larger picture. So if the dealer sets the low of the week, okay, this is look at this example right here. This is mid-London and into the U.S. session. This was the peak formation low. So if you look at a 4 hour chart, it might simply look like a very tight W formation. So understand each smaller session and segment is responsible for making up the larger pieces of the chart on the bigger time frames. The dailies. Well, if there's a high during the week on a day chart, then that one bar will be the highest point on the daily chart. If the dealer comes back to that level 3 weeks later or a month later, that will form out an M. Now, when he comes back a month later, he will do that with inside the London session, in the shadow box perhaps, or as a stop hunting action to jam the traders that were stuck there and put pending orders or stops and come back and get those orders. So that's how on a daily chart, this might be in April, and then it will do all this and come back. And then in May, the dealer will repeat the level and maybe go slightly above or come right back below. If you haven't figured it out yet, the entire business is based on the dealer's behavior at the highs and lows of the year, the quarter, semi-annual, the day, the week. The way the dealer handles the high and low is telling onto what his next move will be. If the dealer breaks above the high and stays above it, he will rise. If the dealer breaks below the low and comes right back above it, he will correct against the trend or what's shown on the chart. Okay? Let's look at this drawing a little bit. More of the weekly breakdown. Okay. The end of the week consolidation, right? Calculate where the next accumulation level will come in. Carries right into the beginning of the week. Pins to the mayonnaise to start the week with an aggressive move to the downside. He now has lower level shorts trapped. He quickly snatches it away, 25 to 50 pips off the level. Now, draw a line here. The dealer goes back to the level. This is a 22 trade, by the way. The dealer goes back to the level, but fails to pass the level or break the level that was set previously. Why? Passing or repeating the level will release the short sellers into profit, allowing them to click out. If the dealer has them in trouble, he has their foot on their throat, he is not in the business of letting them out. So coming near the level is a psychological mind bender for you. I'll keep my tongue clean. Because here's what he does. How many times have you been in a trade, you sat through it all these hours? Look, let's say you were short in here. The dealer drags it back all night and all the way into the U.S. session. Starts to come back and you're like, I'm almost out, I'm almost out, I'm almost out, I'm almost out. You get really close, you're -5, -7. Ah, shit, I'm not out. All right, if he comes back, it's going to go this time, it's going to go. The dealer comes all the way back and you think you're out and then he snatches it away. How many times does that happen to you? You sat there 6, 7, 8, 10 hours and then you start telling yourself when it gets in here, you start telling yourself, I didn't sit here all night for nothing. I'm going to make some money out of this. And then guess what happens? The dealer never breaks the previous level. By never breaking the previous level, this is now a lock as peak formation. We know we have the peak formation low. The dealer has issued us a 22 trade. What is a 22 trade? A 22 trade is when you have a second leg of a second leg. You have a W formation off of the larger W formation. You have an M formation with a second M. It's a 22 trade because you have two legs. You have second leg of a second leg. That's where the 22 comes in, okay? The second leg of a second leg. Okay? Now, here's how the cycle progresses. The dealer has established the low point of the week by violating the psychological support and resistance for the week. He has made the anchor point. A wide W over 2 sessions takes several hours to develop, and he shows you a 22 trade in the U.S. session. He makes level 1 rise, pins the mayonnaise, and ends the day back in consolidation. How do you figure out where the next zone will establish? From here to here, divided by 2? Damn, if that ain't mid-level consolidation, you're 50% fit. Okay? Now, we expect the dealer to do one of two things coming out of level 1 consolidation. The trade you should be ready for is straightaway. And that's what he does here. What is a straightaway trade? It's when the dealer does not move above or below the blue box to issue a visible stop hunt for us to take advantage of. But there are other ways to spot it. The straight rise trade will issue some type of medium, mild, or medium stop hunt. In this example, just outside or late Asia, he issues double railroad tracks to the 50. In here. Along with TDI forming above the baseline, blood in the water, stuff I will talk about, this is a solid entry, and obviously you see what happens. Okay, you now have second day of rise or level 2. First day, it made the formation, aggressive behavior, it made the trend anchor point, price finished up. The dealer corrected back into middle of the range. He did a straightaway trade, which is a straight rise. What is the straightaway trade, Steve? Why is it significant? The straightaway trade is significant because all the traders that got short in here that were thinking this was warranted, that took the shorts in here and put their stops here, 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 are now getting into margin trouble. If the dealer comes back with a visible stop hunt below the box, he releases the traders by making this behavior, right? These traders in here are now seeing a profit when he comes back to this level. I told you 100 times, and today makes 101. They're not in the business of giving you your money back. They're in the business of taking it from you. So they're not going to repeat the level and give you that opportunity to book a profit. They're going to chop around above the previous trap zone and straight rise. What the dealer is saying, I got to get the hell out of there. I got to get the hell out of that area because I got everybody on the fence. I have my margin call window up, and I know that I got a bunch of people hurting, and if I just straight rise out of there aggressively, I could finish their accounts and book a profit. Okay? That's what he does. He goes back into consolidation. In this example, he happens to close near the high. You have a rise during the Asian session, level 3. Day 1, day 2, day 3 of the cycle. After a big rise, the market needs more guys. The dealer shows what we call level 3 behavior. The dealer will correct the market and book a profit against those positions that he has induced to trade. Day 2, the 50 has crossed the 200 moving average. Most retail traders wait for a validation. Maybe they'll trade a break on the pullback and get into this part of the cycle. Maybe it starts going really well and you try to convert your trade into a swing trade, only for the dealer to take it back. When you see this sideways behavior, the erratic behavior, you're simply waiting for the next stop hunt to trade. 1, 2, 3. We expect a correction. Hit the stops high, hit the stops high, drop. We take that trade. The first target here, second target here. Or high of the week minus low of the week divided by 2 is mid-level consolidation. Expect the price to come in here. Right? If you take the peak formation low and peak formation high, and it happens to be 600 pips, then we can expect a corrective move of half of that distance, 300 pips in here. If the ADR for the week is 200 pips, we can expect a corrective move of about 100 pips, about where the moving average, the 200 and the 50 might fall. So the cycle, intraday, where you use the 50 and the 200, on the longer time frame, on the course of the week, when you're taking the high and low, it's the same thing. You understand? The pattern, the pattern, the pattern. The dealer does the same thing in a microscopic view where he works it intraday or for the session. He works it over 3 sessions, and he also does the larger cycle where he does it over 3 days, 3 weeks, 3 months, 3 quarters, semi-annually, 6 months. That's where these big, huge fib patterns come from, these Gartleys and butterflies. They come from a development over 6 months where the dealer has hit the low and then formed a second wing. What is it, Jim? A 786 retracement or a 50% retracement of the first move? That's where these things come from. But I'm telling you that the reason that things are designed or that they lay themselves out is because these are how the traps are set for the traders that are not in the know to take the validation of the extensions or the AB equals CD extensions to take these trades the wrong direction. And the dealer will validate these patterns by hitting the stops of the traders that are outside of that grasp. So I think like a failed Gartley turns into a butterfly. Think for a minute. A Gartley is like this, right? That's kind of what I talk about. A failed Gartley, which turns into a butterfly, is this. The dealer in the failed Gartley has simply hit the stops in this area of the traders that got short on the first leg by rising above the first leg and coming right back below. The dealer has triggered the stops, activated the pending orders of traders trading the break, and has jammed them up by issuing that pattern. That's where those patterns come into play. Okay? All right, so this This is a 15-minute chart, but if you look at this on the 1 hour, it's the same thing over and over again. Someone told me just now up here that this is the same exact chart that we see in the pound. Well, guess what? The dealers have only a small handful of moves. And since they're limited in their moves, we got them. We own these bastards. There's 4 things they can do, and I'll talk about in a few minutes, but if there's only 4 things they can do, you learn how to identify the 4 things, and everything else is bullshit. Anything else on the chart, a chop, a move, a spike, a release, a rainbow stochastic, a MACD, it's all bullshit. If you understand that there's only 4 things the dealer has in his pocket or his bag of tricks, and you learn to master those 4 things, then I just ripped the curtain off of Oz. We see that it's just an old man that has out of gas behind the curtain. And now you would understand what they have and how they do it. The only thing different from these guys' move is this margin right here. And I don't even look at this margin. Do you personally give a shit if GJ is trading at 129 by 0.14 or 126 by 0.57? Do you really care? The saga or the cycle repeats itself over and over again based on the pattern and where the dollar volume is tracked. They could care less about this outside margin, and I'm telling you, you shouldn't care about it either. When they tell you, oh my God, Euro's at 116, the lowest it's been in 20 years, oh my goodness, who cares? Does it, like when the dollar is weak or strong? I know that gas goes up a little and bread changes and day-to-day activities change a little, but it doesn't really affect your day-to-day life. It doesn't change you at the pumps, pumping your tank or buying a loaf of bread. It doesn't really make that much of a difference in your everyday life. But a 1,000-pip movement in the pairs creates people and emotion and panic and fear and greed, the things that I talked about in the first couple of slides. And that is on purpose. All you need to concern yourself is the pattern. This chart is a couple years old. It's GJ 15-minute. This pattern is a pound-based pair. So naturally, if you tell me that GBP USD looks like this, am I clairvoyant? Am I psychic? Did I tell you something that's just absolutely outlandish? No. I was taught that the behavior is the same. The attributes or the triggers are changed. This week, it's OPEC decided to raise the price of a barrel or cut a price of a barrel. Next week, corn is not growing because they're using it for ethanol and now we can't get bread. So the dollar's going to be weak. Next week, it'll be the payroll numbers weren't as good. This week, it was they were bad. Do you understand? These are the garbage things that they use to make you follow fundamentals and bullshit technicals and get your ass handed to you. Non-farm, what did it do? Hit the stops high, hit the stops low, formed the W formation on the pound and rose up. If you were able to identify the high or the low based on the information I taught you, you were able to bag some money out of those trades. Canadian, same thing. Spiked to the high at news release and came back in. Now, how could I possibly know that before it comes out? How could I have drawn something for you last week, 2 weeks ago, a month ago, 5 years ago, ever since we've been hanging out? How could I possibly draw something for you and it come true over and over and over again? Understand? The pattern is the same no matter the time frame or the story or the news release or the country's dilemma or a war or bombing a tower. God rest everyone's soul in 9/11. They use those things as the reason to complete the structure. The structure doesn't change. Okay, they're shifting the zone big right now. Some people have said, Steve, don't you understand? The price has been dropping straight for a year. It hasn't been that bad, but let me pull up a chart and let me explain something to you. I just showed you how intra-week The dealer makes the formation, rises, and corrects it all the way back, right? Okay, well, let me find my slide here a second. Okay, good question, since we're talking about the pattern. The question is, why does this pattern show up in other markets besides Forex? When I took my training, I was taught Forex and I was taught equities. I don't like equities. I've always been a night owl. Forex was kind of like romantic at the time. It just started. Bankers did it. I was like, I want to be cool. I want to trade Forex. I fell in love with Forex. Also, I mentioned in the public format that I bought the red light, green light software. Everyone knows I fell for Forex Made Easy. And they beat the shit out of me. Not the software, the people at the seminar. Anyway, and the software. I guess I got it from both ends. Anyway, the behavior is the same because people are the same. The traps that the dealer set are the same in other markets. So, the greed factor, the human behavior, the human condition. You see price going up, you get excited, you buy, the dealer sells to you. Whether it's corn, oil, a pound, a dollar, doesn't matter. It's the same thing. So when price rises, people get excited and want to buy. When price corrects, people panic and sell. Those behaviors are universal in every market. That's why this exact behavior shows up in other markets. The only thing different between what I'm laying out for you right now and the equities and metals markets are the timings. But I promise you, if you sit there and spend a little time on these markets and map out the time, you will start to see the stuff I told you about. Okay? False move session beginning, guess what? The dealer will make a fade at 9:30, 10 o'clock. If the dealer stays above the high, he will continue to rise. If the dealer hits the high and corrects back below that high, he will correct the market. 9:30, 10 o'clock, 10:15. Okay? The safety trade does not present itself on this chart. The safety trade comes in right here. The safety trade would be a visible stop hunt back in line with the peak formation above the low of the week in this example. How many pips? 25 to 75. 25 to 75 pips off of the peak formation. The safety trade would come in. Now looks like 475, but it's 25/75. Okay, we'll talk about these trades more. We'll talk about them in a little bit. Market makers will not move in one direction for more than 3 days in a row. And this week they move 5. But understand this. As a general rule, their cycle is built upon 2.5, 3 days, 4 days. So what you're looking at here is they establish the psychological support and resistance for the week. They correct and act against that, break that level. They make their anchor point, peak formation low, level 1 rise, level 2 rise, level 3 rise over 1, 2, 3 days. They hold that level, wait for them to hit the stops, and look for an entry. The dealer forms 3 levels of rise, hit the stops, drop. You're a seller against the retail trader's uptrend. Think about this hammer right here, this nasty candle, what he did. The dealer had stop loss orders here. He had pending buy orders here. And he made sure to get his hand on every single one of them. Okay? By triggering those orders, opening the spread, and making sure that he extended his reach well beyond what the candle shows you. When he does that and ends on a nasty hammer like that and comes back below the high, right? The dealer forms a high, breaks above the high, and comes back below that high as if he reached out there and grabbed the orders. When the dealer grabs the orders, it is time for you to go opposite of the herd mentality, short. Okay? This is what you're looking at. Okay, here we are. Consolidation. The dealer is grabbing the money at the high, grabbing the money at the low, mid-level consolidation. This is in essence what he's doing. Okay? If there's money to the high side, the dealer will make the formation and grab that money at the high side with aggressive, volatile behavior. Okay? The dealer will grab the low.